Remember, please hit like and subscribe for me. Thank you so much. Okay, let's go.
Hi, everyone. Today is Thursday, July 17th. My name is Anne-Marie Band, and this is the Moneyball Morning Report for the Benzinga Pro platform. We are taking a look at the E-mini S&P, the opening range for the E-mini S&P, high 6,300.50, low 6,291.25. You'll notice that we broke below it and above it in the pre-market, and so price action is basically flat, right? No inventory events currently in the space that would suggest, some kind of correction, but we shall see. All right, we've had earnings come in. Earnings have looked really good. Of course, they've brought the earnings estimates in order to keep earnings formations happy and traders happy. And right now we are dancing around both the point of control, 6,302, and the volume weighted average price of this entire formation, and that is 6,299. Also happens to be right at the top of the opening range high. So I expect some traders try to come in and hold this area, but as we discuss often, we are seeing range-based behavior, and so the edges on the bigger time frames will give us the ability to trade in a solid way. So what's the thought for me? My thought is, since it's sideways, it's going to have to get above 6,311 or so, and then break out, pull back, retest so that it heads into the IB of Thursday, which is 6,327, or it falls back into the range and heads to value area low, which is 6,281. Notice how much price action we have here, a very deep dip that was easily identified by the bigger range looking at a 4-hour formation. All right, that's incredibly important for us to remember. We got to zoom out and understand where support legs are going to sit. It does help that the IV, the implied vol move from Wednesday's formation, just jams right into this low edge of support, and where all the other buying pressure shows up. We are still in a nasty range, and frankly, we are right in the middle of it. Breakaway, 6,313. That's where I think more buying opens up. IV for Thursday, 6,327 on the upside, all the way down at 6,229 on the downside. So chances are we'll come back into this IV from Wednesday and chop around if we remain in a range state. Market is waiting for something. Don't know what. But if we take a look at daily formations, we can see that this sideways pressure is either going to break north or it's going to break south. And you might go, gee, thanks, Captain Obvious. But knowing that we are waiting for a break should give us the opportunities to say, wait a second, I'm going to look for the deep dips to buy or the big spikes to sell. All right? Framework is the most important thing that you can look at when you're building your structures to trade with minimal risk. All right, let's move to the NQ. Opening range for the NQ, high 23,072, low 23,031.25. Notice we fail the low, dip into the prior day's opening range, hold the volume weighted average price and the point of control, and then we bounce. Where do we bounce into? Look at this heavy congestion. This is a monstrous area of heavy congestion, and it's really divided into two pieces. So if we stare down, all right, where did I break out? Where buyers began to take over and where buyers took over again, I can see that that's right around this zone right here, right? Notice that's where we came into on the pre-market. You might go, well, Anne-Marie, I might have put that number up here to show breakout formation because it was a look above and fail. Listen, those will both be right. Here's the thing about a market. It's not exact. That's why an artistic mind will work more effectively than a very precise mind that's looking for an exact level. Okay, there are too many people participating with too many different ideas and too many people trying to work trades against the level, right? This is a liquidity break to the north, stops all the sellers that are saying, whoa, this is a short, and then they turn right back around and throw it back into the range. Speaking of which, value area high, 23,092, value area low, 22,916. Implied volatility for Thursday, high, 23,203, low, 22,926. That's what we're staring down. Are dips buy zones? To me, yes, they are. But look at how deep the dips are. This one comes all the way back into July 13's opening range formation. It also happens to be the IV for Friday, which I find to be very interesting. And then a bounce coming in right after that. Look to the left, folks. And if you break formation and break structure like this, if you're thinking, hey, listen, I'm buying the low of my opening range, if it breaks, get out. You can always get back in once it recovers, right? And that could happen 2 or 3 times in this space. You just have to be very careful about what's going on. We'll talk a little bit more about what we see mechanically here that tells us we will likely have a liquidity flush or liquidation break, but that's what we're staring at now. Dips or buys, what would I like to see? You know, I'd really like to see a test of 22,970. If it loses that area and then recovers it, I think that would be a good long, right? Chances are we're going to chop around that 23,000 and it might not come down into that area. But if you try to buy at 23,000, just watch your risk. You can't have more than 20 points of stop. All right. And if that's too big using an NQ based on the size of your account, use an MNQ, right? Use the micro. All right. Taking a look at the YM. Listen, this is the one chart that feels like it's going to break down. Now, why would I say that? High, breakdown. High, breakdown. High, what might that be? Chances are that we might have a breakdown. Now, what's the trade? Take a look at the deep dip across some of these wicks. Again, heavy congestion here, so that works for me, right? It comes right into that area at 43,965. If it loses this zone, this YM is going to be a short, just like it was all the way to the left. We got to be careful here. It's got to hold this 44,400 zone properly, or we're going to run into some problems. So, value area high, well above us, 44,775. Opening range, quite near the value area low. High, 44,431. Low, 44,374. We broke above it and below it. Notice, look to the left. Always tells us a story. And we get a high of an opening range of prior days. That happens a lot. A lot. Okay, so if we break above 44,490, that's a buy stop environment in my mind, all the way up into 44,578. So that's a buy zone. I'll stop saying buy stop. I know that confuses some people. But there's a buying area above here. Low volume node could say it punches up, accelerates to the edge of the volume weighted average price for the entire range that we're viewing, which is 44,542, and then retraces to the downside. But this formation looks bearish to me. High, low, lower high, lower low, lower high, lower low. So I am thinking there is more downside action in the YM. It seems to be breaking before the other two indices. And yeah, that's what we'll stare down. That's the only one I think is actually a short on the bounce at this juncture. All right, let's take a look at micro Bitcoin. Big breakaway formation from about 115,000. This I don't know. Do we want to call this an ugly head and shoulders pattern? No. I think I'm just going to call it an ugly formation that is holding the high of 123,000 and some change to a low of, what is that, 116,000 and change. Okay? 50% range right at 120,000. So now that we know that, I am going to remove the fib. So we know that's the halfway spot. Also, big fat round number. You can see that a lot of sellers came in at 120,000. Opening range. High of 119,910, low 118,905. So about $1,000. Does not break the high. Does not break the high of the opening range. Breaks the low, retraces into heavy congestion, really where the candlestick bodies sit. You know, there are groups of traders that will look only at candlestick bodies. I have tried that approach, and it ends up really expanding risk. Although it gives you good forward motion, the risk sometimes can be very expanded if you ignore the wicks. All right, so the high currently that we need to watch is 119,500. If we get above that area, we're very likely to creep back up into 120,200. The IV move for Thursday is 121,032 on the upside. On the downside, it's already been tested, 108,430. We are also colliding into the point of control. That's where most of the activity's been. Traders are going to try and buy this area. We could see a stop run and then a recovery of the zone, but we could also see a continuation downward. My thought is let the stop run, watch it, see if it can recover the implied volatility of 118,400. If it does, you can trade this range created by the pre-market action. If it doesn't, you get yourself some more downside pressure into the volume weighted average price of 117,100 or value area low at 116,317. Landscape pretty uncertain. Looks like news is making people a little bit nervous. Let's take a look at what's going on with oil. I think it's important to back out here. Oil still caught in a monster range of motion. Right now, the near-term support and resistance lines, which with my strategy is always the most important thing to look at, we've got a high of $69.38, a low of $63.88. So what is that? $6? Yeah. Pretty wide range to trade in oil, but a nice range nevertheless. So let's take a look at the opening range. Very tight. Remember, when you have super tight opening ranges, anything's possible. We could break above, we could break below, we could continue above, we could continue below. That small opening range gives us the highest probability of uncertainty of motion. You have to go back to prior days to see what's going on, or simply wait for breaks that actually occur. And we've had some very tight ranges, and you can see the break below, break above, and break below again. This one breaks above, comes into, breaks above again, and then breaks below. And so that's very customary with tight opening ranges. And that's true of oil, whatever instrument you're trading. It truly is. It's just a hallmark of the tight opening range formation. All right, so what is that tight range? $66.69 the high, $66.58 the low. We break above into old resistance of the prior day, collapse, we break below, and collide into value area low. Could this be an inverted head and shoulders pattern? You betcha. You betcha it could. So what does that tell us? If we break above 67 today, we've got all these wicks that could push us higher and then bring us back lower. So we want to be careful of those. But if we break above 67, a buy zone is likely going to be engaged as long as we pull back and do not break $66.87. That's my thought. Right now, this looks like a potentially bullish formation. potentially bullish. We'll see what happens. Dips or buys in this case. Value area high, $67.95. Implied volatility for Thursday, $67.49 on the high side, $65.72 on the low side. Remember, as intraday traders, we normally get ourselves involved in the muck. So try to be careful when you're sitting in this muck. Bring yourself into the regions of support that give you the least risk and the most opportunity for reward. Taking a look at gold. Gold is finally rolling over, but not by much. Take a look at what's going on. See this? This, friends, one of my least favorite formations, is a flag pattern. Now, something's going to give, right? This flag pattern says something's going to give. But until it does, we literally have been sitting for, dare I say, weeks in this range. That entire zone is noise. Dips or buys, spikes or sells. Look what happened yesterday with the big spike. We moved all the way into the IV, the implied vol move, for Friday and broke down. Pretty interesting. Also, prior resistance. Super easy to take a look at price action in a range to know when it's going to stop running. Now, we never know for sure, but we certainly can estimate what's going on. And as soon as it reverses, we can give ourselves an absolutely fantastic short formation within the big framework. Overall, what are we looking at? High, low, lower high, lower low, lower high, big piece of news. Let's pretend that news didn't even come in because it didn't matter. Another lower high, and then the move forward. This, to me, anticipation of interest rates coming in. That is what I believe is being traded here. Now, in the interim, before that happens, and who knows whenever that will happen, we have a value area low that is 3,326. 3,322 is the implied vol move for Friday. Today, Thursday, we are outside the implied vol move for Thursday, 3,335. I expect traders to come in and try and bounce here. I do. I expect them to try and bounce, but it is going to be messy. Take a look at the range here. The range has a low of 3,326 and a high of 3,337. If we break above that, we get to go to the VWAP. Look at the opening range, how tight it is. This is one of those examples when an opening range is very tight, it breaks and immediately continues in one direction or another. You'll notice that gold has a tendency to do that on these tight range formations, but indeed, we can break above and below. Because the range is so tight, that just makes it more likely. Here we are in the opening range formation of yesterday. I really expect buyers to show up here. I wouldn't mind trying a micro right there. All right, and finally, let's go to SPY. SPY, big fat range, not breaking down like the YM is, right? Like the diamonds are. Look at the range. Look at how long. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. 12 trading days caught in this noise. Now, it is a very tight range. What could happen? We could break down into value area high at 612, run up the flagpole again. We could break below value area high at 612, lift right back up at, 608, off to the races. No idea which way this is going to go. We have to watch price action move. Oops, let's close this. We have to watch price action move in the direction and then confirm. But right now, any trade we take in SPY, we're going to be diddling in the middle. What is Thursday's implied vol move? The low, $620.60. The high, $627.80. Opening range, also tight. Also tight. Volume is also compressed in general across the board. It's been fairly thin. Yeah, I'm not sure what's going on, but I will say this. The best trades are going to be at the top of resistance, all the way up here, really, or at the bottom of support. Everything else in here is iron condor land, right? Both ways, non-directional motion. Point of control, $623.56. Volume weighted average price, $622.99. Value area high, $625.88. Value area low, $621.71. And see this noise? This noise suggests to me that good buying zones are right around $623 with about a 30-cent stop. Or a breakaway outside of the zone at $625 that runs to $626. But these are awfully wicky spaces, so you better watch your risk. All right, folks, today I'll be on lunchbox trading. I know I'm meeting, I know I've got a lot of meetings today with a lot of different students, and so looking forward to time with everybody. And listen, manage your risk. It's the only difference that separates you from any other person in the market, and that is going to define your edge. Take care, everybody. I'll see you on the streams.